Hello, good morning. You're watching Market Cafe on ET now with me, Vinny Motiwala, and making her debut today is Snehisha as well.
Hi,
a
Vinny,
very good morning to you, Snehi.
Good morning,
And
Vinny.
she's already a part of Market Cafe. She's been the producer, and now having her as an anchor is amazing. Snehi, good luck on your debut.
Thank you
but
so much.
Are we going to see some good luck on the D Street, or US markets didn't give us a good handover?
It's a little shaky to say so because we've got a rather muted handover from the US markets. Now, the US markets have closed mixed as investors weigh in earnings. The S&P 500 has ticked higher by just nominally 0.9% and the Dow Jones has shared 0.03% or like 10.5 points. Now the Nasdaq Composite closed slightly lower by 0.04% and you've got a lot of earnings that are coming in on Wall Street. So Netflix earnings disappointed, they fell short on the revenue estimates, and Bank of America CEO Brian Moynihan says that he sees a relatively mild recession coming on. So that's something that the world could be worried about. Goldman Sachs has dampened momentum slightly with their earnings miss, and investors will watch out for Morgan Stanley and Tesla earnings. On the other hand, you also have Biden facing roadblocks in Congress. He signs an executive order on child care, elder care, but overall on the US Wall Street, stock futures tick downwards. Now let's look at what the European markets have been doing. European markets closed higher with the stock 600 briefly hitting the 14-month high, but do note that they closed earlier than the US market, so that might not have much of an impact on the Wall Street today. But UK job market figures showed unemployment rose slightly, and UK wages grew by more than the expected amount by 5.9%. And UK CPI and Eurozone PMI data slated to release today, so watch out for that. And Sweden's Ericsson shed 8.6% after reporting a quarterly fall in sales. So that's everything that's coming in on the global markets front. But Vinny, what's happening on the commodity front, on the oil front? Tell us more about it.
Absolutely, saying handover seems a bit muted, mixed handover, but oil prices, they seem to have steadied near that $85 per barrel mark. Yesterday, we did have the China data which came in, which was much stronger, and we saw a slight bit of an up move over there. This morning also, that steady move has continued for the Brent crude oil prices is somewhere around the $85 per barrel mark as well. And what we're seeing coming in terms of US inventories, now there is a sign that is indicating that there's a shrinkage in the US inventories, which pointed that there could be a tighter supply coming in. Although anticipation is that a slew of indicators are on the US monetary policy and the economy have kept the gains a bit limited over there. So because of that, supply could be an issue, demand supply concerns coming around. China data was good, so there is going to be demand, but if there's a shrinkage in the supply, then that could be a worry as well. So because of that, oil prices have, as of now, you look at it, steadied around that $85 per barrel mark. Nothing exciting coming in on that front. WTI crude oil about that $80 per barrel mark at 81.06 to be precise. Both the benchmarks of oil are currently seeing a bit of a positive uptick there and up more than 0.2% in trade.
Alright, so let's move on and let's see what's happening, and let's look at the global cues for today. So UK CPI numbers are slated to be released today, as well as the Eurozone CPI, and US crude oil inventories and Eurozone S&P global manufacturing numbers will be out today. And global earnings, on the global earnings front, you have Morgan Stanley that is going to report its numbers. But let's look a little closer to home, and even on the Wall Street today, you've got Mastech, ICICI Securities and Tata Communications who are going to release their numbers today. On the corporate front, you have BML land assets to list, which might happen today, and other events you have Apple CEO Tim Cook. He's going to meet PM Modi today, and MG Comet EV India launch will happen today. Also, you have Tata Motors who is going to launch the CNG version of Altroz, so keep an eye out for that. So these are all the events that are happening today that you should watch out for.
Absolutely, those are the events that we are watching out for today. But let's, talk about some of the important earnings that have come in the global markets as well. And, that is what is something that was impacting the markets. Now, in terms of when you look at it, focus is on the key banking names and banking earnings as well. When you look at Bank of America, the Q1 revenue came in at $26.39 billion versus an expectation of $25.12 billion. The net income surged by 15%. Overall, however, when you look at in terms of Goldman Sachs numbers, they were a miss on the street as well. We saw the stock price fall as much as 2% as well in terms of because the expectations was missed on the revenue front after $470 million hit tied to the sales of the consumer loans as well. Just keeping an eye out on those earnings.
Also, you've got streaming giant Netflix that delivered a mixed set of earnings for Q1, and they had a mild miss on the revenues front that came in at $8.16 billion versus the estimated figure of $8.18 billion. So a slight miss over there. And the company has also delayed the rollout of its password sharing crackdown, which was originally planned for the first quarter of this year.
Keeping it with earnings then, and we have United Air and J&J, both the Johnson & Johnson, that are reported the numbers as well. Now, United Airlines reported a loss but guided for a profit in the second quarter. The airlines posted a loss of $194 million versus $1.4 billion same time last year. Meanwhile, Johnson & Johnson earnings and revenue topped the street estimate. Company, however, went ahead and lowered its sales guidance for its pharma vertical.
And there is still more work to be done, and I am ready to do it, is the word coming in from the Atlanta Fed President, Bostic. He favors one more rate hike before holding them above the 5% mark in the central bank's battle against flaring inflation. He also says that he is not factoring in a recession in his baseline forecast while citing resilience in the US economy.
And a major economic realignment is unfolding before us, and it's happening at a lightning speed. Now, European Central Bank Chief Christine Lagarde has said that the global economy is fragmenting into competing blocks, now which each block trying to gain maximum partners. Of course, US and China, the world's two largest economies, will lead these blocks as well. Where does India stand amidst all this? At least last week, IMF came out with the report and suggested that China will contribute more than 20% to the global growth in the next 5 years. India's contribution is also significant at about 13%, more than that of the US. How will these developments reshape the global economy? And before we discuss that, let's go across and listen in to the ECB chief and what they had to say.
In this sense, insofar as geopolitics lead to a fragmentation of the global economy into competing blocks, this calls for greater policy cohesion. Not compromising independence, but recognizing the interdependence between policies and how each can best achieve their objective if aligned with a strategic goal. We certainly could see the benefit of that in Europe, especially where the multiplier effect of common action in areas such as industrial policy, defense, investing in green and digital technologies is much higher than if member states are acting alone. There is another benefit, that of achieving the right policy framework will not only determine how our economy fare at home, but also how they are viewed globally in a context of greater system competition. And while the international institutions established in the wake of Bretton Woods remain instrumental for fostering a rules-based multilateral order, the prospect of multipolarity raises the stakes for such internal policy cohesion.
So that's the word coming in from Christine Lagarde. But we also spoke with Kanwal Sibal, who's the former Foreign Secretary, and Siddharth Sanyal, who's the Chief Economist of Bandhan Bank. So let's listen into what they had to say.
Europe, you've seen, is wooing China. Macron has been there. Now, German foreign minister has gone there. The Europeans are making it very clear that they don't want any conflict with China over Taiwan, and they're distancing themselves from the United States. What does this mean? This means that they don't see an option at this stage to wean themselves away from the Chinese market. Then China is controlling some very critical raw materials, well, electrical vehicles and certain critical raw materials and everything else. They have been thinking a lot about this in the past and have developed almost a monopoly position in many of these areas.
The long and short story of it is that in terms of the overall level, if I see in terms of the overall size of the economy, despite the strong growth we have ahead of us in the next few years, will still be significantly smaller compared to a China or the US. But at the same time, at this moment, the incremental growth or the delta, so to say, over the course of the next few years in terms of the delta or the incremental growth contribution from this particular economy will be very, very significant.
And let's talk about Apple. Apple unveiled its first retail store in Mumbai, BKC, and no points for guessing it was a full house with the tech enthusiasts from across the country making a beeline to experience India's first Apple store. But why is Apple betting big on India? How will the company reap the benefits of this venture? My colleague Vikram Oza is here to explain us these details. Vikram?
Tech giant Apple has unveiled its retail store in India. It's a swanky flagship outlet at the Geo World Center in Mumbai's Bandra Kurla complex, BKC. No points for guessing, of course. It was a full house today with tech enthusiasts from across the country making a beeline to experience India's first Apple store. The tech giant is going to follow this up with another store in Delhi's Saket just 2 days from now on the 20th of April. Now, of course, the big question is, why is Apple betting so big on India? Well, the last couple of years have been this dream run for Apple in India. Today, it commands a whopping 60% market share in the premium mobile segment. Rivals like Samsung and others are far behind Apple. And while budget smartphones command a big audience in this part of the world, India's appetite for premium and mid-premium smartphones is clearly on an upswing. Only last year, the premium smartphone segment has seen a growth of 55% in India, and the mid-premium segment has grown 20%. So with rising incomes, higher living standards, the premium segment is set to get a further boost, and Apple wants a big part of it. Over the last several years, Apple's India sales have grown steadily. They've hit a record high with sales worth 49,242 crore rupees in FY23. India also seems to be benefiting from the China Plus One theme playing out globally. Tech giants like Apple, they're looking at diversifying their supply chains and manufacturing away from China in countries like India. Today, Apple produces close to 7% of its iPhones in India, compared to just 1% 2 years ago. The tech giant had begun manufacturing iPhones in India in 2017, with a PLI scheme being a key trigger for them. And Apple CEO Tim Cook has long seen India as a key market to Apple's future and has recently said that he is bullish on the world's fifth largest economy, and the company is putting a significant amount of energy into the market, is what he said. But despite rising sales, Apple's products remain highly underpenetrated in India. The Cupertino giant has shipped about 6.5 million iPhones in India in 2022. It pales in comparison to the 50 million each year in both the US and in China. And with a brick and mortar presence in India, Apple is also looking at cross-selling other products like Macs and Apple Watches and AirPods and iPads, among others. So the retail store in Mumbai and the next one in Delhi may just be the springboard, really, that Apple needs to stamp its authority with and presence with in India. All eyes, of course, now on Tim Cook and company, how they go about their business in India.
So that's how Apple stores could fare for the company in India. But with that, let's slip into a short break. Don't go anywhere. More news and updates on the other side.
Welcome back, and you're watching Market Cafe on ET Now. Saying last evening we did have some details coming in on capital gains, some rumors and news reports around it. Now, clarifying on these news agency reports, the Finance Ministry sources told ET Now that there was no discussion on capital gain tax in the ministry. The ministry denied any discussion on capital gain tax, calling the media reports as baseless. And now Income Tax Department has also clarified the same. The Income Tax Department has tweeted that there is no proposal before the government on capital gain tax. So there is surely some clarity that we're getting in on that front as well, Snehi.
Right, and let's also take a look at what's happening with the Vande Bharat trains in Kerala's first Vande Bharat train will be launched by PM Narendra Modi on April 25. And Railway Minister Ashwini Vaishnav has confirmed that under the PM Modi leadership, Kasaragod is getting that treatment that is being given right now to the northeast part of India. My colleague Sameer Dikshit spoke to the State Minister, and let's listen into that conversation.
See, now the Honorable Minister for Railways has announced that the train will run from Trivandrum to Kasargod or from Kasargod to Trivandrum. Kasargod is the northernmost district in Kerala. And till now, Kasargod had only passenger trains starting from Kasargod. Other trains were running through Kasargod but not originating or terminating at Kasargod. So, Honorable Minister has taken a view that the entire Kerala has to be covered. It's taking the view of the Prime Minister when the Prime Minister has now reached out to the Northeast, which was not being done in earlier regimes. Now, Kasargod was getting that treatment which Northeast was getting in the earlier regimes in Kerala. Kasargod, any development used to go up to Kannur only. So, beyond Kannur, Kasargod is also being considered as part of the state with equal importance. So I must thank on behalf of the entire Kerala as well as specifically on behalf of the people of Kasargod.
And this train, Vande Bharat train, which is a sheer reflection of the way Indian Railways is transforming. So how much you are confident that for the commuters, for the railway passengers there in Kerala, this will bring transformational sort of change?
See, infrastructure development is the prerequisite for economic development. So Kerala's development will become, the pace will become faster because of this train, and Kerala is going to benefit in a massive way in the coming days because of the Vande Bharat.
Let's move on as Thrive seals the deal with Coca-Cola. Krishi Phagwani, who's the co-founder and CEO at Thrive, says that they are going to leverage the vast expenses of a reach that the beverage major has. And let's also understand from him what is the commission breakup that they are talking about in terms for the platform as well. Listen in to the snippet.
Coca-Cola has a massive distribution pan-India today in the restaurant ecosystem. I think their direct reach is around 700,000 restaurants pan-India. Our primary objective is to essentially leverage this distribution to tap into and access a lot of these restaurant partners and kind of expand a lot quicker. Similarly, they have a lot of marketing assets on the consumer side that we plan to leverage for consumer outreach and to kind of scale up on that side as well. In terms of what we plan to do with Coke, to be honest, there is nothing specific that we plan to do with them that is specific to Coca-Cola. I think the core objective for us is to work together to drive higher attach rates for beverage sales in India for food delivery. The commission structure for that product is a flat 3% commission, and we charge a payment gateway charge on top of that. Now, bear in mind that the reason we are able to keep the commission structure so low is that for Thrive Direct, a restaurant is completely responsible for generating their own demand. On the consumer side, which is a consumer platform that we very recently launched, and this is only live in Mumbai today. It's currently in beta. We plan to take it out of beta maybe in June 2023. The commission structure is slightly higher. We're charging between 10 to 14% commission for all orders generated on the consumer platform. And the primary reason for that is because we are taking responsibility and ownership for customer support, for delivery, and for a lot of things like that.
Now, the IT sector has been in focus ever since TCS and Infosys have released their Q4 earnings. But Vetri Subramaniam, who's the Chief Investment Officer at UTI AMC, does not see any major setback in IT as a whole at the moment. He's also going to look for buying opportunities as the sector. That's the word coming in from him. So listen into that conversation.
I've been tracking Infosys it's pretty much been a company that's been around all my career. And it's always had this habit of, surprising people very sharply, both to the upside and to the downside with their earnings reports. So it felt like I'd been transported back to another era when, the stock behaved the way it did. I think it's sort of early days at this point, Aisha, in terms of whether this is, company specific or sector specific. None of the commentary that we've been picking up in recent, weeks, months with the IT sector companies suggests that there's, a significant setback at a sectoral level. And the company did call out some specific issues that they were experiencing. I think the operating premise would remain that, I think the IT sector is sort of emerging into the post-COVID era on a very strong footing in terms of the growth visibility that it has relative to the kind of run-up we had maybe during the period 2014, 2020, which was a very sober era for IT, so to speak. Incrementally, we would be a lot more positive towards IT. You're right about the valuations.
On that note, we are going to slip into a short break, but as we're going to break, let me take you all through the exciting lineup we have on the markets for you all. At 9:20 a.m. to talk about the markets, we have Saurabh Mukherjee of Marcellus Investment Managers. While to talk about the buzz in the sugar space, we have at 9:35 a.m. a discussion with Sanjoy Mohanty, the DG at ISMA, as well as Atul Chaturvedi, Executive Chairman at Sri Renuka Sugars. Talking about earnings at 9:30 a.m. we have Gopal Balachandran, a Chief Financial Officer and Chief Risk Officer at ICICI Lombard. At 10 a.m. we have Anuj Kathuria, President at JK Tyre Industries, to talk about the growth, whether it's on the right track for the tyre companies. And to talk about industry trends, we have Finolex Cables joining you, Unitas Deepak Chhabria, Executive Chairman, at 10:20 a.m.
Hi, welcome back and thanks for staying tuned. You're watching Market Cafe on ET Now. Now, while the SGX Nifty is indicating a muted start for the markets, let's take you through a list of all the stocks that could be buzzing today, either on news flows or on the back of their Q4 results. And for that, today we have Ashesha with us in the studio. Ashesha, run us through all these stocks.
Hi, good morning. So yes, we'll start with an earnings candidate then. Tata Coffee will be the first one in focus as it reported its numbers. Consolidated revenues from operations in the quarter gone by stood at 723 crores, an uptick of 10% on a year-on-year basis. As far as margins are concerned, they've declined a tad bit. Margins for the quarter gone by stood at 14.6% versus 17% margins that the company reported same time last year. The company also said that improved price realizations driven by product mix in instant coffee business both in India as well as Vietnam operations aided the company's quarterly performance. Moving on to Piramal Pharma then, remember on 14th of January, the company had informed the exchanges about US FDA inspection at their facility in the United States and now the company has shared an update with respect to this, where they say that US FDA has issued an EIR or Establishment Inspection Report for the said manufacturing facility, and the inspection has been successfully closed by US FDA. So on the back of this update that has come in, Piramal Pharma will also be in focus today. Let's move on to another earnings candidate then. ICICI Lombard also reported its numbers. Profit after tax saw an uptick of a whopping 47% on a year-on-year basis. Solvency ratio meanwhile stood at 2.51% versus 2.46% same time last year. Net premium written also saw an uptick of a marginal 2% on a year-on-year basis. A couple of banks are in focus on the back of their fundraising plans. Let's talk first about SBI, where they informed the exchanges that Executive Committee of the Central Board has approved raising of funds to the tune of $2 billion US. This will be done on private placement basis via secured, unsecured loans, which will be in US dollar or any other convertible currency. Bank of India is also in focus on the back of their fundraising plans where they've considered and approved raising of capital to the tune of 6,500 crores. Lastly, Som Distillery will also be in focus, and that is because their expanded capacity in Karnataka has now commenced production. This will lead to a better supply of company's products across all of its distribution point in the relevant markets. So on the back of this update that has come in, Som Distilleries will also be in focus today.
Okay, Ashesha, thank you so much for the stocks to watch out for in trade this morning. But also we'll be keeping an eye out on the shares of BEML because BEML's land asset will be listed on the exchanges today. What will it actually mean for the shareholders? Let's go across to Sharad and find out more details on that. Sharad?
Well, an important listing is coming today as BML's land assets will be listed on the bourses today. And overall, if you see, the ratio has been given into 1:1 ratio for the shareholders when it comes to shares. Now, apart from this, what are the assets being divested? That would be in focus. And of course, more than 1,500 acres of surplus freehold lands would be there in this asset pool. Apart from the 124 acres of land in Bangalore and 401 acres in Mysore will also be there, and around 30 odd flats from the metro cities. Now, these are the land assets, but how the valuation metrics stack up, and as per the analysts, the new entity is actually going to mirror the current shareholding, and also there would be a huge value unlocking happening as sale of land assets take place between the government agencies as well as the developers. But now let's look at the value of land assets, and on 7 September 2002, as on the closing price, it stood at 1826 rupees per share, and ex demerger the stock price actually stood for BML at 1464 rupees per share. So during that time, the notional value or the indicative value of BML's land assets stood at 362 rupees per share. Now, as per Antique Broking also, they have stated that the entire valuation of the land asset stands at indicative price of 624 rupees per share.
So that's the word coming in on the listing of BEML land assets. So keep an eye out on the stock of BEML. But let's go across to Lisa, who's standing by to give us more updates on brokerage notes coming in and the stocks that could be in focus on the back of these notes. Hi, Lisa.
Hi. So Morgan Stanley has given an overweight on IGL, that is Indraprastha Gas, and they have hiked the target price to 540 from 507 earlier. So they expect a 16.5% CAGR growth on volumes over the next 2 years as they see clarity on the volume growth going forward. Also, the new gas pricing policy that is expected to reduce the cost of capital for Indraprastha. So, moving on to CLS, they have maintained a sell on TVS Motor, and they have hiked the target price by 100 rupees to 1049 per share. They see that the electric scooter segment that is growing well, and the export that is expected to recover by FY25. On margin, they say that the improvement is likely to be driven by multiple factors. However, they have maintained a sell on the stock as they see that the valuations that remains a bit stretched, though the growth factors that remains intact for the company. And lastly, Citi has maintained a buy on Just Dial. They have hiked the target price to 815 from 735 earlier. They say that the core business that has sustained momentum in Q4, and the margins that, however, it remains well below the pre-pandemic level. However, they see expansion going forward for Just Dial, and they expect a 14% top-line CAGR over FY23-25. They say that the valuations that remains attractive and inexpensive, and as it's trading at 9 times for September 24 price to earning. So these are the stocks that the brokerage has on its radar today.
Okay, thank you so much for that, Lisa. But let's talk about Mankind Pharma. Its 3-day IPO for the company will be starting on 25th of April and will close on 27th of April. Obviously, for their anchor investors, we will be seeing the IPO opening on 24th. We'll get a lot of anchor investors on that front. Talking about the price band, according to the Red Herring prospectus, the price band is at 1,026 rupees to 1,080 rupees per share. Promoters will be selling 1 crore shares or around value-wise, it is going to be 1,081 crore rupees, while investors will be selling 3 crore shares as well, which is going to be a value of around 3,225 crore in terms of the value as well. So promoter holding is going to be reduced from 76.5 to 76.5% from previous 79%, what they're currently holding. So post IPO, they'll be holding 76.5%. Let's keep an eye out on that, because company obviously is the second largest in terms of sales volumes in FY22. They operate 25 manufacturing facilities across India, and 97% of their sales are on the domestic front and domestic market. Mankind Pharma is obviously engaged in developing, manufacturing and marketing diverse range of pharmaceutical formulations across various acute and chronic therapeutic areas as well. So an interesting IPO that we will be keeping an eye out on. 25th April is when the IPO will be opening, Snehi.
Right, so keep an eye out for the IPO of Mankind Pharma. But moving on, insurers will soon be allowed composite licenses for giving multiple insurance products, and ET now has learned from sources that consultation with stakeholders is over, and the government aims to introduce the proposed bill during the monsoon session of the Parliament beginning in June. My colleague Prakash Priyadarshi has more details on this report. Listen in.
The sources are informing that the government has completed consultation with industry on Insurance Laws Amendment Bill 2022, and now Finance Ministry has initiated inter-ministerial consultation on the proposed amendments. Post that, it will be sent to the Cabinet for its approval. Sources are also informing that the composite license will be provided to the company with certain rider. The idea behind is to give an option to the industry to provide all kind of insurance products, be it life, health or general insurance through single license, which means all kind of insurance products will be brought into single umbrella. However, these options will be provided to the industry with certain rider to protect the interest of all insurance companies along with consumers. Apart from that, the proposal also include to reduce minimum capital requirement for life, general and health insurance businesses. As you are aware that the government is making such amendments in existing act, which is Insurance Act 1938 and IRD Act 1999 to much needed reform in insurance sector, which will also help government to increase penetration as far as insurance coverage are concerned. Finance Ministry had invited comments on the proposed amendments in November last year, but industry had some apprehension on some of the provisions. Based on that, it was decided to undertake further consultation, and now government is moving ahead with the proposed amendments. We also given to understand that the government is planning to introduce this bill in next session of Parliament.
Okay, thank you so much for that, Prakash. But let's shift focus and talk about Tata Power. That's going to be in focus. Why? Because after the centre asked the company's Mundra plant to general and sell power as per the Section 11. What does this actually mean? What more details are coming in on this? Let's go across to Anisha, who's here with all the breakdown on this. Anisha?
Hi, good morning. It's a sentimental positive coming in for Tata Power because the CERC has actually issued an interim order clarifying on the Section 11 applicability for Mundra UMPP. Now, this is important because Mundra had shut down its units because they were under recoveries and overdues and they were not getting the money out of the state generating companies as well as discoms. But now with this clarification coming in, there will be additional pressure on the companies to pay up. As a result of that, Mundra has started its unit in the UMPP. Tata Power has started its Mundra UMPP unit, and it's a sentimental positive. As a result of that, the losses that were expected earlier in the quarter gone by would not be there because now there will be no under recoveries and the company will be able to get their dues as well. Separately, analysts believe that this will reduce the financial burden, but the bigger point or the moot point for Tata Power is actually getting the supplementary PPA out of the way. This is only an interim and a temporary relief coming in. They need to sign those supplementary PPA with Gujarat and other states. If that happens as the street is planning, it could be a re-rating trigger for the stock going forward, and the analysts are estimating that the earnings rate could be to the tune of 45 to 50%. So that's the massive upside that the street is waiting for. But for now, it's an overhang on the counter, and that's why we have seen off late sideways move come into the Tata Power counter as well. Back to you guys.
All right, so that's the word coming in on Tata Power. But Abneesh Roy, who's the executive director at Nuvama Institutional Equities, continues to have a buy rating on ITC. He believes ITC will be one of the best performing FMCG stocks. Let's listen into why he thinks this way.
We have a strong buy on ITC. I take the point that it is at a 52-week high, and last year also, if you remember, in the Nifty, ITC was among the best performing stocks, and we expect that to recur this year also. In fact, in our model consumer portfolio, we have a 30% weightage on ITC, which is the highest along with Godrej Consumer, and we also like Britannia and HUL. So what we like in ITC is clearly even in Q4, we expect double-digit volume growth in cigarettes to happen. And if you see a 4-year CAGR in Q4 and Q3, it will be fairly similar. So they have actually continued to do quite well. So legal cigarette industry is gaining market share from the illegal, which is still around 23% of the market. But illegal is losing market share because of the rational tax policy. Also, we expect that in FMCG, just like other companies, ITC's gross and EBITDA margins will also start expanding, improving from Q4, and FY24 should be a good year from a margin recovery perspective.
Okay, that's the view coming in on ITC, but the realty space has surely been buzzing. Yesterday also we saw Nifty Realty gain and closed with gains of almost more than 1%. We spoke to Gulam Zia, Senior Executive Director at Knight Frank India, and Bimal Sharma, Executive Director and Head at Retail Advisories and Transaction Services at CBRE, on the pricing trends in the real estate space. Let's go across and listen to their rationale of what is actually influencing the prices.
Every market is different and behaving differently. And depending on the product and the developer, the quality, the pedigree, the sales are moving. And likewise, the prices are moving up. The current sustenance of the demand shows that we will have continued improvement in the pricing as well, that the market will see.
The price rise, say, within NCR, say, Delhi, or within Mumbai would also vary from pockets to pockets. So gone are the days when you used to, see a price rise all across, very, very democratic, all through the real estate market of the country. It is not so anymore. So good developers, good products are in demand, and that's where the price rises would be very visible. And at the same time, there would be, below par kind of products and not very well known kind of a developer in the same market. Like even in Hyderabad, I can talk about a few such locations or developers where they're not able to take the prices up at all in last 2 to 3 years. In fact, some of the inventory which is lying unsold for a long time, age of the inventory as a concept also has to be taken into consideration. Apartments which have been sold for last 2-3 years, for example, are not finding any takers. So there, the discountings are also coming in. So overall, the price rise of about 6 to 7% that we see all over, when I take the weighted average, is a reality. The best of the products would perhaps be getting, say, 10 to 12% of a rise every year on year. Wherever the rents are going high, the sales will not go as high. Because why are you renting? Because you don't want to buy today. So the demand for rent shooting up is one thing that is emerging wherever the rental rates are going high.
Okay, moving on. Climate change has gripped the world, and this time it's heat waves. 11 deaths were reported a day for yesterday in Maharashtra, and West Bengal has also shut schools for the week due to the soaring temperatures in the state. Now, the Met has issued high alert in several states. So what can you do to save yourself in this scorching heat? Let's go across to Vikram Oza, who explains how you can take care of yourself this summer.
Officially, it's still just the month of April, but several parts of India are reeling under high temperatures. Only yesterday, 11 people have been reported dead. They died because of a heat stroke after attending a large public gathering in Navi Mumbai. 20 people have been admitted to hospital. 3 of them are critically ill. With weather forecasters now predicting the impact of El Nino and a harsher summer than usual, it is imperative that you prepare now to battle and protect yourself from heat strokes. But what exactly is a heat stroke? What are the kind of symptoms you can expect because of a heat stroke, and what should you do in order to protect yourself against it? Let's answer all of these one by one. Now, the Centers for Disease Control and Prevention defines heat stroke as a situation when the human body can no longer control its temperature. The body's temperature rises rapidly, the sweating mechanism fails, and the body is unable to cool down. And during this time, the body temperature can shoot up all the way to 106 degrees Fahrenheit. It can happen in only 10 to 15 minutes. So people who suffer from heat strokes, they experience symptoms of fatigue, of a headache. There could be dizziness, nausea, vomiting, low blood pressure as well, and increased heart rate. So as a matter of precaution, there are a couple of things that you can do to avoid a heat stroke. Firstly, you must stay hydrated. You must drink water as often as possible. Secondly, when venturing out into the sun, you need to ensure that you wear lightweight clothes and light-colored cotton clothes at that. When it comes to the scorching heat, you should use an umbrella or perhaps a hat to avoid direct exposure to the sun. And finally, you should avoid standing in the sun for a long time, and you should keep high-protein food at bay. Several parts of India, in fact, they are seeing daily temperatures much higher than normal. The Indian Meteorological Department, the IMD, has already issued a heat wave warning for several areas, and those areas include Punjab, Haryana, Chandigarh, Delhi, Bihar, West Bengal, Sikkim, Odisha, and also coastal Andhra Pradesh. Maximum temperatures are above normal by 3 to 5 degrees Celsius over many parts of the northwest, east, and northeast India. So with the mercury soaring, all eyes, of course, on the sky as we wait for the monsoon clouds. But until then, it's going to be a long, a rather scorching summer. So we need to prepare ourselves and drink up as much water as possible and stay away from the sun as much as we can.
Thank you so much for that, Vikram. But with that, we're absolutely out of time on this edition of Market Cafe. It's a goodbye from Snehi, myself, as well as the team who put this show together. SGX Nifty indicating a muted start, so don't go anywhere. The markets will take that forward.